Hey, what's up, guys? This is your friend Mario. Now, in today's video, I'm going to go over today's day trades that I made and also what mistake you should avoid when trading oil. Now, this is a mistake that I made that I should have not made if I was paying attention to my calendar. All right, now, guys, appreciate if you guys support this channel. Please click on that subscriber button, and also don't forget to hit that bell, and you guys will get daily videos of my day trades. All right, let's get started. So today I day traded MTG. Now, why did I trade MTG? One of my favorite setups is because there's a gap fill opportunity. Now, before I go into that, actually, the other reason why is because it was in my momentum scanner. Now, I mentioned this many times before. Momentum is what pays you, not patterns. Momentum. So it was in my momentum scanner. There was a gap fill opportunity, so that's a nice little setup. Broke out of this resistance level, and actually it was an earnings catalyst, so that's nice. So you combine that together, and we have a nice probability trade. So what was I looking for in the morning? Now, I wanted to see how this stock reacted at the open. So it did have a weak open. But what I started to notice was that it was creating higher highs, and there was this level right here, this 12 level, and this 1197 level, that I felt that if it broke out of that level, we could squeeze some shorts and we could have a nice high probability trade. So I did get in on this candle right here at around 9:22 a.m. Eastern, Central, and there was some nice volume here. Broke out. I did get around 12.05. I raised 15 cents to make 15. So it's a 1-1 trade. Again, a quick scalp. So I did make my 15 cents, and I did sell a 12.20 on this candle around 9:32 a.m. Central. So that was a nice trade. Again, on this reversal. So again, one of my favorite setups because of the gap fill. There's really no resistance or support in this area, so when there's a gap breakout on a gap fill opportunity, there's high probability of success. So hope you guys learned something from this one. Now, what I'm going to cover next is actually my oil trade. Now, why did I trade oil? Well, first of all, DRIP was actually on my momentum scanner. So, I wanted to see what was going on. Now, if you look at the 3 month chart, it did break out of this 639, 640 level. So I was looking at it. There was volume again. So if you look at the morning open, there was some nice volume, and I wanted to see this continue to maybe 660. So I was risking 10 cents to make 10 cents. So I did buy actually in this candle right here. When I noticed when it pulled back and I noticed this candle, it held this 640s, which is support, and I felt because of this candle kind of gave me that little telltale that this could continue. So I saw this candle and I saw a push, and I did get in actually around here, around 648, 649, and wanted to see if this thing could continue to trend until 660. Now, unfortunately, it did not do that. It did pull back, and actually let me put this little arrow so you guys could see it a little bit better. So it did pull back, and I did get stopped out around 641, and actually 641, yeah, 641 right here. So I did close that for a little loss. Now, one thing that I should have noticed was that today was actually the EIA status report, or the petroleum report, that happens every single Wednesday around 9:30 a.m. Central. Now, why is that important? Because when that happens, usually traders tend to wait on their bets until after the report comes out, and that's where this spike comes from. And the crazy thing is that I actually got back into this trade. Again, I got in right here, and actually let me change the colors so it's easier for you guys to tell. Bought right here and sold right here, and I got stopped there, so that's why I sold. Again, so that's a red, so green, red. And I decided to buy, actually get back into 645 because there was it kind of held a support area and it created higher highs. So I felt like, you know what, this could continue to go higher. I'm gonna get back in and hopefully sell at 665 or 660 whatever the case. My original target, risking 10 to make 10. Now there was this huge quick spike right here, and I was like, whoa, this is nice. This could continue to trend, but then it reversed on me, and actually I got out at 6:45. So I actually did not lose or make any money on this trade. But one thing that I totally forgot was that today was the EIA Petroleum Status Report. And again, usually what happens when that report comes out, which is like at 9:30 a.m. Central Time, there's a huge spike in the volume, but the initial move reverses. And I was actually pretty happy of this move, and I was hoping this could go maybe 660, 670, because there's some decent volume here. But because it's the petroleum report, usually the initial move always reverses, and as you can see, it did reverse. And again, this drip is the inverse ETF of USO oil ETF. So if you guys could see it here in the ETF, the sell-off, 9:30, and then the bounce, the reversal of that move. And that's usually what happens with oil. Now, one thing I want to quickly mention, guys, there is this calendar, that kind of gives you what's happening, the economic calendar, that what's happening on a daily basis. Now, as you guys can see today, let's see, where is the status report? See here, CEA Petroleum Status Report. And actually July 18, which is today. Here, see here, it's 10:30 a.m. Eastern, which is 9:30 a.m. Central. This petroleum status report, which kind of measures a weekly oil inventory. So, hope you guys learned something from this video, guys. Again, avoid that mistake that I made. Learn something from this video, and again, don't forget to subscribe and click on that bell so you guys can get my video notifications. And you guys will hear from me soon. Have a good one, guys. Bye.